Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for what's today's date, Wednesday, the 5th of February. Welcome to the end of day market recap. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Everything that we're going through is for information purposes only. All right, there's the race to get the disclaimer in, but please read that full risk disclaimer right there. So another exciting, interesting day in the markets. Why interesting? Why exciting? Because the market continues to kind of churn higher right now, and it's different groups that are pulling the cart. Some similar. We'll go over some names that made 52-week highs today, but look at the semis today, up 2.4%. That really caught my eye. Also, the precious metals are doing very well. Little bit of rotation on the tape today. Once again, because you got a big move in bonds. So I know you're going to hear a lot about bonds today. Also, the dollar, which is something that we've been talking about. We can kind of look at a couple of these charts here before I go over some of the new high lists for today. But here's what the dollar is doing. It is now back below that 50-day moving average. Let's just bring candlestick charts in here too. But look at that. We are back below the 50-day moving average. So notice the lower high on the tariff talk. So, we are in a headline-driven market. But I would say this, when you look at something like this, the dollar that came up on the tariff headlines and lunged up but did not make a new high, so a weaker attempt at making new highs and fell right back below its 50-day moving average. I hear a lot about the negatives of the headlines and with the headline driven market, but I would also look at it, I would be optimistic and talk a little bit about the opportunities that some of these headlines give, because they're pretty short-lived. And so far, they've been buying opportunities. They've been situations where, of course, you don't want to get too caught too over the tips of your skis with risk. But if you're positioned correctly, they've been some buying opportunities for now. And, unless something else really comes out that is more material, but for now they've been buying opportunities, and we do remain, just to remind everybody, we are still in a bull market, and we are still seeing more names go up versus more names go down. So we want to continue to monitor for those changes and note when they do, right, and stay objective, but continuing to see more names going up versus more names going down. I'm going to just review the TLT chart because I don't want to skip over that, because I think it's important, because not so much, I don't really look to play bonds long, but what I do is look for implications of what happens when either yields go higher or, in this case, yields go lower. One other quick thing I'm going to mention to you too, which I try to, whenever I spend a couple more minutes or whenever there's a big move in bonds, I always take a step back and try to explain this a little bit, because we just had a Fed meeting last week, right? And you hear, oh, the Feds, they're going to be on the Federal Reserve is going to be on hold for a little bit with cutting interest rates. However, the Fed only dictates rates on the short end of the curve, right? The overnight rate. When we're looking at TLT and you hear that rates are going down, that's across the curve. This is I think average duration of this ETF is 18 years. They call it plus 20-year Treasury ETF, but the duration is actually 18 years. So those yields, right, and bond prices, they fluctuate based on demand and supply. They have really nothing to do with the Fed is doing. So they move on market dynamics. So right now we've got a pretty big move this week, and since really a couple weeks ago where we turned the corner in the middle of January, and since then we've been heading higher. Now we're going to be into some resistance here a little bit. Note that there is a bearish 80% rule now in play. I'm looking for a move back up to about $94. And that means once you enter the value area when you started below or when you started above and you break into it, there's an 80% chance that over the period, over the year, that you pass all the way through that, provided that TLT stays above 87.97. There is some short-term resistance ahead, I think, but this really kind of takes the pressure off the market a little bit, right? And can allow, especially it takes the pressure off small caps and micro caps, which are doing pretty good, and mid caps as well. So this is good, and it gets me a bit more excited that there will be more trading opportunities, and probably less so in the Magnificent Seven names, or if you want to call them the Lag Seven names. I heard that from Craig Johnson over at I believe at Piper. Um, and I really like that term. You know, we had Google earnings out last night, which disappointed to some extent. However, if you pay attention to what some of these CEOs, or some of the information that you're getting on the conference call, you know, they mentioned that they're going to be rampant, that they're still ramping up CapEx. So, you know, Broadcom was the first name that jumped on this in the after hours last night. And it actually kind of came off the highs a little bit. But the did pretty well today, and it's probably a little bit based on what some of those comments are. Here at Broadcom, Nvidia, which has kind of been, I'd say, like, has been a little bit of dead money, and I still think it's challenging here because it really hasn't gone anywhere since this deep sink situation. But dips are being bought, and it's giving you the ability to trade some of these dips if you're quick, because ultimately we're right back to the 200-day moving average, which is essentially where we were a week ago. Looking at the overall semis, again, still a tough bunch, but they're not breaking down either in regards to this chart back above the 200-day moving average. So that was one of the stories I think that was interesting. Let's talk a little bit about the technicals in the S&P, and we'll look at the Qs. But we're now back above the 5-period moving average. So we're still inside value. So we're still home on the range bound for now, inside the value area for the month. But at least we're getting these trading opportunities where if you buy the dip, you're getting rewarded. Now, the other half of this is, don't forget to, you know, stay nimble and be flexible and take some profit targets too, because every time that we get up to this area, like, is this area up here is not an area to kind of sit back and get comfortable and do victory laps, right? As far as I'm concerned, right? Until we start to kind of break through this, and that level 609.76, that's what I would be paying attention to. Now, Qs, the value area is going to look a little bit different, and I think we actually closed above 525.96. So that is above the value area. Again, it's a little bit different shape there than the value area uh, for SPYs, and also we're above the value area for the week and above the value area for the month. The week is the yellow, the gray is the month. Watch this 525.96 level. That's what you want to pay attention to. If we start to drift back below, then you know we've lost the this upside momentum since we've had since the beginning of the week. Let's talk about this IWM. And IWM, just when you think it loses the fight with the 50-day moving average, right? This was 1, 2, 3, 4, 5. I'll give it 6, even though this really didn't count. But 6, 7, 8, 8 days of spending time around this line here, the 50-day moving average. Then, of course, getting rejected on Friday, gap down on Monday. Bullish 80% rule just about complete. Here's a situation where we started the month below value, broke in, and look at us, we're just about to complete the 80% rule. So I believe this is an actual close above the 50-day moving average. There was a tweet that I had out earlier. I'm going to show it to you because I try to mess around and have some jokes out there. But here you go. Here's my Rocky Balboa reference. He keeps getting knocked down, just like IWM at the 50-day moving average. He's all beaten up, but he's still coming back to fight. So that's my analogy. Again, I try to mix some type of sports or entertain, maybe a little bit of entertainment, because that's a movie. It's not a real fighter. But Rocky, as many times as you keep knocking him down, he keeps coming back off the ropes. And here you go. So I will be watching 229.84 in the IWM ETF. And again, you don't necessarily have to go outright long the small caps, but you can certainly look for opportunities in some of the areas that are small caps, as well as you look to see what's going on here in the micro caps. So even a little bit riskier. And again, we'll do better when interest rates are doing this. 132.70. Right. I wanted to cover a little bit. We talked a little bit about earnings. I also want to cover the economics, because we had We're going to have not only more interesting, notable earnings reports this week, but we're also going to get more data. Today, we had the ISM services, in my opinion, that's more important than the ISM manufacturing that we had a couple days ago because we are more of a service economy. And note ISM is a leading uh, economic indicator. So I view ISM more important. And we came in like, this is a good number. This is like a Goldilocks number. The estimate was 54. Right? We don't want to see really hot economic data right now. We don't want to see really weak economic data either, but this is above 50, which is expansionary, but less than the hot, estimate of 54. And a reminder that tomorrow we're going to get initial jobless claims, and then on Friday we're going to get the monthly jobs data, and that's why I wanted just to bring that attention to you because, as I mentioned, TLT has made a nice move, but it's going to have to get through some resistance, and TLT will move on what the Friday's monthly jobs data will be, right? And they're looking for 170 in non-farm payrolls. Change in private payrolls is 150. Now, to me, that's a little bit of a low bar to jump over. That's not a huge number of jobs that they're looking for in this report, kind of like last month. Remember, going back to last month's jobs data, that was the same thing. They were looking for a really low number. I don't know why they were. To me, because it's all about how they set the bar for this data. So here it was last time around, kind of the same thing. They were only looking for 165. Change in private payrolls, they were only looking for 140, and we came in like everybody was like, "Oh my God, the jobs number is hot." And I was like, "Well, wait a minute. Why is the number so low?" So it looks like they're lowballing the number again. So you got to be careful of that, where the estimates are. That could cause a little. So if we come in about the same, 200, around 200,000 jobs, it's going to cause the market to oscillate a bit and probably sell off a little bit. So that's what I would think too. I think that we're probably going to get another. Again, I'm not an economist. I don't crunch these numbers, but I think that the economy is doing well. It's not doing amazingly well, but I think it's doing well. I don't think it's doing poor. So I would have to say, like, whoever's estimating these numbers, I think is doing in this particular situation, because they're different depending on what you look at. We've seen inflation numbers that last month they were looking for high estimates, but for this number, they're really looking for another low number. So again, not sure why that's the case, but anyway, we can't really change it. Our job is to understand what the market is trying to tell us, and then we can make some adjustments as we go along. I'm just going to look at this 52-week high list because I think you've got some themes that should be jumping out to you. CrowdStrike. There's also, I think, maybe FTNT. Yeah, there it is. Right. So a couple names that I've been tweeting about and talking about and putting on trades. I don't want to. I don't want to do that right now. Let me just let me get out of this. Sorry. Let me pause this 1 second. All right, back on track here. FTNT, name that's been breaking out. So very nice, and I love these patterns. Beautiful, nice uptrend. You had to be patient with this sideways range, break higher. Right, you're also seeing this with CrowdStrike. I probably tweeted out a chart of CrowdStrike a few times over the last few days, but it had about four or five inside days, and it is now going in the direction of the trend and breaking out. So cyber stocks are particularly strong here. Also, talked about ACN, right? This is IT. We talked about how you can't tariff IT services companies. That's a nice break higher for this one. Hood made a nice move today, right? A little bit of call buying. Again, this name's up a lot, but it's rallying into its earnings. And a couple of these names, FTNT, by the way, reports FT to close tomorrow. And Hood is going to report, I think, in the next week. So strong name there. Also, when we look at a few other names that stand out, Costco, which just reported their monthly sales number. Look at this group go. And again, just like with the cyberspace, it's not just one name, right? You've got a few different names going on here. SFM, Sprouts Farmers going up as well. BJ Wholesalers, also breaking out here. So all you have to do, like in right now, right, in this sense, you just have to understand what groups are really strong, and the market is rewarding you, just saying, hey, you could go out and pick any one of these names that's in this group, and you're going to hit, and that's what the market is doing right now. Very strong. These types of these type of uh, consumer stores, Walmart making a new high today. The banks act, Kroger also making a new 52-week high today too, which also belongs to that group. Meta made a new high today, but again, this is what I'm talking about with being flexible. Even though the trend hasn't changed, this is a nice break higher. It's probably due for a little bit of consolidation, right? So still above the 5-period moving average, best in breed right now out of that Mag 7 group. But I think overall that Mag 7 group is probably seeing more rotation out of and rotation into some other areas. Here's also the 4-week new highs. Remember I said in the beginning of the video that there's more names going up versus going down. There are, both when you look at 52-week highs in the S&P as well as when you look at 4-week highs. One thing that jumps out here, well, there's a couple of things that jump out is it's not dominated by any sector. You got some consumer in here and a decent amount of consumer in here. And you've got some financials, some healthcare. I want to talk about that group next. A little bit of tech in there. IBM is another name that can do, and IT services that also continues to break out. And you got a little bit of real estate, a little bit of utilities. What jumps out here on the new week low list? Well, I would say consumer staples, right? Your more defensive area of the market. A lot of these are making 4-week new lows. Let's talk about healthcare for a minute. This is a group that I've mainly been watching the medical devices because they've been the strongest of the strong. By the way, one other quick point to make here, right? If you look at either the 4-week new high list or the 52-week new high list, and it's a bunch of names that you have on your charts that are on your watch list, you're doing a good job. If you're looking at the new, if a bunch of your names are on the 52-week new low list, you're not doing a very good job, right? We want the best names out there. We want to stay away from the weakest names, right? It's like Queen says, no time for losers, right? We don't want to be going after names that are going down into the right. We want names that are going up into the right and making a new 52-week high, and the next day making another 52-week high, and then the next day making another 52-week high, right? That's that's what we want to see in in our portfolio as well as on our watch list. But here you go. Here's medical devices making another new high. Now, I still think this has to get through these previous highs, but this is relative strength within the group. However, there's other things that are starting to kind of take shape a little bit. Take a look at XLV now, which is just getting above its value area for the year, right? So just starting to kind of move, and you're starting to see some names waking up a little bit. Amgen, right? So all we're trying to do is observe to see if something is changing here, right? We want to be observant and objective to say, hey, something might be changing here in the healthcare space. The name that I think I talked about in yesterday's video that had a nice little move, which has been beaten up, was Regeneron. Right, Regeneron tacked on a little bit more gains, but again, this name's in a downtrend, so I wouldn't say that this is relative strength. But again, I'm just taking note of some of the things that are trading. And there was a name that I saw call activity in, which is not a name that I'm really that familiar with, but I'll show it to you once. All right, here's VRNA. This is Verona Pharmaceuticals. Now, I wouldn't necessarily buy this name here, but I just happened to catch a pretty big option order today, and maybe wait for a little bit of consolidation because now it's a little bit extended. But look at this. I'm just very surprised at a name that's doing. We don't see too many names like this. Another name that's nobody really seems to be talking about too much is what Gilead's been doing. Gilead is making multi-year highs. Quietly has jumped out to new highs. So pretty impressive there. One other group that I was going to mention also, if I can find it for you, let me just get my watch list out. A couple REITs. This is CBRE company making a new high, and this is another name that I've talked about a little bit, which is Welltower. I want to say WellPoint, but it's Welltower also making a new high. These are pretty good looking charts. Just a couple other names that I'm just going to bounce through because I think that this is pretty interesting. But you look at all of these payment companies. This is MasterCard, Visa, right? Visa made a new closing high today. Pfizer had good earnings. Right? This is a nice move higher by Pfizer, moving higher and breaking through recent highs. And then AXP. All right, and AXP had good earnings a couple weeks back and starting to move higher again. So I got long this name today, breaking back above these short-term moving averages. So pretty fresh move here. Another name that I've been touting lately too, and I'll probably end the video here, is Interactive Brokers. This is a name that I want to continue to position in because I view its best in breed in the group. And look at the name up 5.4% today. So very nice. CLS, I said I would end with the last one, but this one you got to wait for a dip at this point. But what kind of relative strength is this in the CLS? Amazing move now up to 140. This stock was just at $100 about a week and a half on the dip after even went lower than that on the deep seek stuff. So really impressive. Of course, earnings signal too, but this is why I pay attention to strong earnings name. Look at all the volume in the CLS. So again, keep this name on your list. Wait, maybe perhaps wait for a dip and go from there. Guys, have a great night. See you tomorrow.